Well, good day, everybody, and welcome to the VectorVest International User Group Forum. It is Saturday, February 1st, 2025, uh, and at least Eastern Time, 11 in the morning here. We're up, we're raring to go. Hopefully, you are too. We've got a great webinar for you today. Folks, as usual, you know this is being broadcast on the VectorVest YouTube channel. So you can see on your screen there, please make sure your computer speakers are turned on to hear the audio portions of this webinar. You will want to adjust the video settings. If you're seeing grainy video, you can choose the higher resolution, clicking on the gear icon, of course, and the recording will be archived and available pretty much immediately after the webinar is done. All right, so I have already seen, we've got folks from all over the place here. I was seeing Jimmer in Phoenix. I see Mary, Bill in St. Louis. Let's just go through. So I see Milwaukee in there. Hey, Bob from Florida. I have a little nugget for you later, Bob. There we have Haas from Decatur, Alabama. Naples, Florida, Jerome, Boston, we've got Norman, and then we have John Boston from Boston. All right, so far too many. Hey, we've got the governor there from the Toronto area. Carol, Carol, good to see you. It was great meeting you in Tampa, and great seeing you get your chance to duet with Glenn in Tampa. Hopefully that was worth the visit alone. All right, so lots of folks I can see. Oh, we got Freezing Tom in Burlington there. Helen from Hong Kong, Tim from Tallahassee. We've got Derboven from Antwerp. So folks, Raul, looks like Puerto Rico. So definitely an international event here. Great to see people coming in from everywhere, and we'll still have people streaming in. We have a lot of content to cover, so we will start getting into that. And maybe first, folks, one of the first things, I've got a spider crawling across the top of my monitor there. Isn't that nice? Live on TV. No, first, seriously, just want to send our thoughts and prayers out to anybody affected by the tragedy in DC, and you know, really, folks, any of the tragedies that we see happening across the globe. Thoughts and prayers go out to them. Everybody, please stay safe and healthy wherever you are. All right, so let's go into the slides here, and let's get our risk disclaimer behind us. So everybody knows there is risk in investing. So everything you will see and hear today is provided for educational purposes only and should never be considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. All right, so here's our agenda, folks. Once again, pleased to be able to host this event for VectorVest, and you can see I'll be taking care of the global market review that we always do to kick off the International Forum and trade ideas. I'm also joined by somebody who doesn't really need any introduction, but I'll introduce him anyway. Mr. Steve Chappell, Director of Trading Systems Development. He will be doing our keynote presentation entitled The Art of Bottom Fishing. All right, so welcome, Steve. Great to have you there. And I'm sure you got some encouraging words for the folks out there. All right. We were talking before this about you know, the resiliency of some of our markets, specifically the US and Canadian market, and maybe more the Canadian market. I know plenty. I've had questions in webinars and email about, well, why is the Canadian market not reflecting any concern about these tariffs? Well, it looks like Friday, both the U.S. and the Canadian market started showing some of that. So we'll cover some of that here as well, but you can see our agenda there. We'll get through all of this and then adjourn somewhere around 12:30. And as we mentioned, the replay will be available immediately after the webinar on the VectorVest YouTube channel. All right. All right, I see Chris saying volume is low for me. I don't see anybody else seeing that. So Chris, might be on your side. We'll see how that turns out, but I'll try to keep an eye on that as we go forward. All right, so let's get right into it here. First thing we're going to cover, global market review. And we're going to start with Canada. So here's the color guard for Canada. You can see market timing gauge, one tick into the red. Guidance that reads the color guard is mildly bearish. VectorVest does not advocate buying any stocks at this time. And you can see that we've had a pretty good string of RT Kicker confirmed green lights in the price column. However, of late, you can see that, we've gone from yellow to RT Kicker combo confirmed, yellow, and then, confirmed again. So a little tough over the last few days. And then, of course, we saw a bit of a sell-off there on Friday. All right, we've also had the BSR jumping around quite a bit in the Canadian market. You can see moves from 0.84 to 0.47, start moving back up. That 0.57 to 0.92 Thursday was a really nice move. And you can see that same behavior in the MTI. Quite a bit of jumping around 4, 5, 6 points here from Wednesday to Thursday. We had a 7-point move there. All right, but the Canadian market is in a down-up situation, so short-term downtrend in an underlying uptrend. We lost the primary wave on Friday. Overall, you can see so far, January, not a bad month here in the Canadian market, up 2.56%. And here is a summary of our proprietary market timing signals in Canada. So you can see the confirmed calls in the DEW still up. They turned up the confirmed calls on the 23rd of January, the DEW on the 21st of January. Green light buyer went neutral on Friday, and we lost the primary wave on Friday, as I mentioned. All right, so that's a quick look at Canada. Let's go right to the States now. And here you can see their market time engaged needle, 3 ticks into the red. Color guard is bearish. VectorVest does not advocate buying any stocks at this time. So we're seeing 3 red lights across the top. And like in Canada, we have seen those jumps in the BSR and the MTI on a day-over-day basis. However, you can see, unlike Canada, any of the green lights are getting a little bit further in the rearview mirror on the US side. And, in the last just over 2 weeks of trading, they've only had 1 confirmed green light. All right, they're in a down situation. And if we look at their return for January, you can see 3.23%. So outperform the Canadian market there. And there you can see the market timing signals. So confirmed calls never turned back up in the US market. They've been down since the 10th of December last year now. A DEW up since the 21st of January. Green light buyer went neutral on the 24th of January, and the primary wave turned back down on the 28th of January. All right, here is the performance, and so far we just ended January, so January year to date are the same. You can see that the European Union led the way, and we did see them picking up and outperform in December, didn't we? So you can see their January 4.27% return. followed by Australia at 3.48%, the US at 3.23%, and Canada at 2.56%. All right, so here's Australia next, and Australia opens and closes earlier than the rest of us, so they were able to get out of the market before all the fun and frivolity started about the tariffs at about 11 o'clock Eastern time in Canada and the US. So you can see Australia, market timing gauge needle, 2 ticks into the green, guidance that reads the color guard is somewhat bullish. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. All right, so you can see there are 2 green lights, and they're getting RT Kicker confirmed green lights in Australia here too. We've got RT above 1 in Australia, and their MTI up at 1.13. Just like Canada, the BSR is a little harder to move with the market makeup in Australia, so it remains down below 1 at 0.75. All right, they're in an up condition, and if we take a look, there's their 3.48% return, and look at that, all our proprietary market timing indicators in the green. You can see the confirmed calls turned up on the 24th of January, the DEW on the 20th of January, green light buyers been green since the 29th of January, and the primary wave turned up on the 17th of January. All right, that takes us to the European Union next. And here's their color guard. 2 ticks into the green, looking very similar to Australia at this point, aren't they? So 2 ticks into the green, same guidance that we had for Australia. And you can see with them, their green lights, price column, and BSR. Look at the BSR in Europe up at 4.94. All right, RT above 1 there as well. And their MTI at 1.51. So 1.51 or 1.5 to 1.6 and above. Typically, the levels we start looking at markets that possibly could be searching for a top. All right, they're in an up situation. Here, as we mentioned, they are leading all of the VB nations so far year to date. And we've got green across the board in the European Union too. Confirmed calls have been up since November. So November 14th, DEW turned back up on the 15th of January, green light buyer, went green on the 30th of January, and the primary wave turned up on the same day. All right, so that's a run through the color guards and the market timing signals. Let's go next to the market timing graphs. Here you can see the Canadian market timing graph. Canada was able to put in a new 52-week high on Friday before, I think it was about 11:09, and then the market just kind of turned down from there. So you can see that, basically Canada went up against 52-week high resistance on Thursday. We're still within that zone. We're able to push through, at least with the wick, but did pull back right into the close on Friday. So I guess I haven't seen the news yet to see whether the tariffs were applied. I know yesterday, initially the talk was Canada and Mexico, and then China ended up being thrown into the mix. So we'll see how that plays out, and we'll see how that affects markets next week. But literally, we're not far. We're within the resistance zone. If the market does move higher, we'll need to break through that resistance level there to continue moving this market higher. And you can see we have some pretty good support fairly close right here. Our 65-day moving average right in that zone, and another level of support there. All right. Here, we'll move on to the US. All right, so the US, you can see a little bit different scenario. They weren't able to make it back to old swing high from back in December. So you can see their price action firmly between resistance right here and support here. All right, you can see the turn down from the bit of a sell-off there Friday. All right, so they're going to have to break through resistance here before they can take a run at their previous swing high. And then you can see where they have support levels, fairly close support level. They've been channeling here for about a week and a half. All right, if that one breaks down, another good support level right there. All right, so that's the US. Here's Australia. So Australia was able to put in a new 52-week high on Friday. All right, and you can see they've been able to, they actually surpassed or broke through their old top a few sessions ago. All right, so resistance for them was the swing high from Friday. If the market pulls back, I've got a dashed line here. This would be the first area I would expect to see support. And then if that wasn't able to hold, we do have support down here, nice double top there. And then this lower support level, you can see there, 65-day moving average in between these two support levels. All right, so that's Australia. And here's the European Union. Looks a lot like Australia. Swing high, they were able to put in a 52-week high on Friday as well. Right, so that's the level they'll need to be able to power through. And if they pull back, they do have support right down here with this two old tops here, and then another level here where we have some old tops that came in through last year. All right, there you can see the 65-day moving average in conjunction with their lower support level there. All right, and you know, their subgraphs look like we want all of our subgraphs to look. Look at the level of the MTI, the buy to sell ratio, RT, all operating above 1 in the European Union. All right, so that brings us to the global market ETFs. These are in the US software, all right, under watch list, cherry picking. We've got December's numbers here. You can see December, a bit of a rough month. Out of the 43, we had 3 winners, 40 losers. Look at the turnaround in January here. All right, so we've got 37 winners, 6 losers. As a basket, they were able to outperform the VectorVest composite by about 0.5%. All right, and then you can see the leaders. Some of them weren't in the list in December, but you can see Poland, Brazil, Chile, Germany, and Switzerland rounding out the top 5 here. And we're looking at just in the month of January, returns of over 13% for Poland. You can see 12.5% for Brazil. So some pretty good returns in January in the global ETFs in the US market. All right, and this is the same global market tracking ETFs. Because we are in January, this is the same picture we saw on the right-hand side of the previous slide. We've left the 2024 year to date on here just for comparison, and we know that 2024 was a good a year overall. So we reviewed this one at the last international forum, and we just reviewed this on the previous slide. So yeah, we just have that there for folks to go over after, those that are interested in these ETFs. All right, so that's the global market ETFs. Let's go next to the sector ETFs, also in the US software and also in the watch list viewer cherry picking folder. All right, so we've got the 2025 year to date. Gold has been doing good. One of the things that's buoyed the Canadian market for sure has been gold. Petroleum was doing good, but it had pulled back of late. So you can see gold at the front here, January return of 14.89%. So out of the 30 for January, we have 28 winners, 2 losers. And as a basket, 3.56% return, outperforming the the VectorVest composite. You can see gold miners, healthcare, financial, regional banks, and what is that? Commercial services or communication services. I think leading out the top 5 here. You can see the other ones there. And then if we look at the top 10 gainers, you can see gold continuing to lead the way there. All right, and you can see some of the same players here. We've got XLC, GGME, IBB, which has come in on the list, biotech, and XLV healthcare, rounding out the top 5 with the 10-day price delta here. All right, so we're looking at 4 to 6% returns on that one. All right, so that takes us next to central bank rate announcements. We got January behind us now, folks. You could see the main central bank announcements that we were dealing with were near the end of the month. All right, Canada cut, so they cut 0.25%. U.S. held firm, and you can see the day after the European Central Bank also cut interest rates. All right, so we have some interesting divergence going on here between some of these central banks. The other one of note was Japan raised. All right, so Japan, who was able to escape all of that worldwide inflation a couple of years ago, all of a sudden is feeling it. All right, so that brings us into February, and luckily, February, you can see, a lot quieter month, right? None of the big players. The only one we'll be tracking really is going to be the Bank of England on the 6th of February. All right. Here's our essays from around the VectorVest world. So folks, once again, another excellent week of essays. I've got them summarized here. I know we're early into the weekend already, so you might not have had a chance to get out there and read the essays yet. Out of the US, Angela Akers wrote one entitled Merit, Excellence, and Intelligence. So how to use VectorVest to learn how to earn income in any of the various market conditions as volatility reigns. And we have seen quite a bit of volatility back and forth, as we've talked about. Out of Canada, Mr. Don Reitzma wrote one entitled Rules to Invest and Trade By. Don't Be a Sucker, How to Use VectorVest, and founder Dr. Bart DeLito's book, Stock Strategies and Common Sense to Avoid Falling Prey to Many of the Pitfalls Espoused by the Investing Industry. Out of the European Union, Susan Hayes-Culleton wrote one entitled What VectorVest Said Before the Ryanair Earnings. So we all know Susan likes her earnings calls. So this one was specific to Ryanair earnings and comparing what they said to what VectorVest had to say. And from the land down under, Australia, Robert and Russell Markham wrote one entitled NVIDIA Corp Oversold. So how do you VectorVest to analyze current status of stocks caught up in the news cycle? And they love, Russell loves earnings per share, sales, and net profit margin. So he was focusing on those. All right. So that's the essays, folks. Hopefully everybody gets a chance to read those this weekend. And just know that with VectorVest 7, you can log into any of the different nations, go to the Viewers tab, and find the essays under Friday's extended version of the views. All right, here's the February almanac, and you can see right here, and we may find out very quickly next week. Typically, February is considered the weak link in the best 6-month period that began in November. All right, we've got the presidential years summarized here as well. All right, I'll leave that for folks to read on their own, but we did have a good January. January typically has a high percentage chance of shaping trading for the year. We'll see if that ends up being true once again this year. But February, we've seen with the end of January, may kind of come in like a lion, remains to be seen. All right. We've also got the roundup, so the earnings update that Angie puts in the U.S. Views on Fridays as well when we're in earnings season. So you can see right now 36% of S&P 500 companies have reported, 77% beating the bottom line, 63% beating the top line. So far, it appears that it may be a bit of earnings season holding up the markets to a certain extent as well. There have been some good earnings reports. All right, so that takes care of the global market review portion, folks. Next, we'll go into trade ideas. So I'm going to bring the software up here. We'll start in the Canadian market. And I'll go to viewers here. All right, so I've got 3 tickers here for the Canadian market. Let me just bring up a graph. So, folks, I do love my pullbacks, but we've got a mixed bag of trade ideas here, and this will mostly be watch list stocks for sure. Given market conditions, etc., we need everything to line up for us. So out of Canada, let me just I'm going to take off stochastics there. You can see DeFi Technologies here. One of the top VST stocks in the Canadian market. All right, you can see their earnings looking nice here. I've got the MPI set up, I believe, on all of these. So you can see that we have both trigger and trend intact. I'm just going to remove some of my drawings here. You can see that we've basically got a bit of a wedge going on DeFi here. All right, so if the overall market continues to move higher, keep an eye on the lower and upper lines as we continue to move along. And this would definitely be one you're going to want to follow. And if it does break to the upside and you get confirmation of that break, the overall market is going to, could be one that starts to fly again. It's been moving pretty well through the year, but you can see there is volatility with this stock. I do have earnings on here, so keep in mind that most likely, well, it looks like you're not going to see earnings probably till about April. Last year it was April timeframe. So, just for those folks that aren't aware, usually I'll keep earnings on so I can look at last year's earnings to see, when I might be facing earnings if I am looking at this position. All right. But you can always, if you do get serious about any of the positions, you can go in and check what the earnings dates are for any of them. All right, so that's DeFi. Let's go to the next one. So Bob, I mentioned a bit of a nugget for you. He loves Agnico Eagle Mines. He's not alone. Many Canadians and Americans, because it is an interlisted stock, like this gold miner. They did buy a favorite gold miner, I think it was last year, Kirkland Lake. But here you can see, of course, the underlying is going to have to keep moving, right? Gold is going to have to keep moving, and these guys are a gold and silver play. Earnings were moving up nicely, a little bit of a tail off, but still up at a good level. You can see we've got trigger, we've got trend. And the reason why I picked this as the gold miner, we have a lot of gold miners that look like our gold ETFs like XGD or GDX, where price is at resistance at these old tops. You can see how Agnico has been able to already break through that and continue to move up. All right, gold did pull back on Friday, but if gold can continue to run, good chance this one can continue to run as well. All right, and then the last one that I have here, Bombardier. So this is a bit of bit of a pullback play. They pulled back to a pretty good level here. We do see some regular bullish divergence setting up here between price action, putting in lower lows, stochastics starting to put in higher lows here. Hasn't quite turned up. So another watch list stock to keep an eye on, Bombardier in the aerospace and defense industry. You can see their earnings look nice here. If we look at it from an NPI perspective, you can see no trigger, no trend. So definitely watch list, something to keep an eye on. See if they can break down trend, get confirmation of that, the overall market moving, etc. All right, so that's Canada. Let's jump next to the US. We'll go to viewers here. Now, I'm not going to do all of these. I'm going to do these 4 for the US. All right, so I've got Celestica here. Now I'm cheating. Celestica, you can play on the US side, you can play on the Canadian side. So here's a bonus on the Canadian side. Now, Celestica, let me take, well, you can see from stochastics now, because it got caught up in that big turn down on Monday because of the DeepSeek story, you can see it did pull back fairly heavily. Now, what do we see? They had earnings. They gapped up on earnings. All right, so you can see the earnings are moving up nicely. Because of that big pullback, you can see we lost trigger, but we still have trend in play here. Now, what do we say about earnings? Usually we want to give earnings about 3 to 5 days to kind of shake out. So keep an eye on this. If you see the 3 to 5 day earnings shake out and the overall market and Celestica continue to move higher, we could be looking at another trigger crossover. All right, you can see with stochastics now, there is room to move. They were quite elevated up into this level here. All right, so that's Celestica. Grupo Superville. I thought it was a Spanish bank. Apparently, it's an Argentinian bank. You can see this is a pullback story. All right, so they've been moving nicely here. You can see their earnings just starting to tail off a bit. If we look at the NPI, no trigger, but trend still in play. So they pull back into this level and a half decent level. You can see they kissed this old top area here. All right, so another one to keep an eye on. It's a $16 stock roughly, and you can see if it can move to the upside with the overall market. You've got some good movement there between $16 and $20 before you're hitting resistance from that old swing high. All right, so that's Grupo Superville. Hey, how about a well-known name, Baker Hughes rig count. So this one here, earnings moving up nicely. No trigger. We've got trend. We've pulled back. And you can see another earnings call. So 3 to 5 days, you can see very shallow trigger pullback here. So give that 3 to 5 days to sort itself out and see whether it does continue to run, is able to eclipse the new high, and you get another trigger crossover on that. FICO, I had to put FICO in here on the US side because it's one that I picked up with a search that I have looking for stocks with falling price over 5 weeks and rising earnings. All right, so you can see FICO fits that bill. And this has been a patience play, folks. This is an example of where patience comes in because I picked this stock up probably back in this area here. And you can see we had a fake out, breakout here, didn't really get confirmation. It pulled back. You can see it pulled back to that trend line that I used, showing price action falling. And my alternate one on earnings here. They have started to break out this week, and you can see they weren't affected by that downturn on Monday. So they have started to break out. a bit of a doji, came in on Friday. Of course, they've been in a downtrend here, so you want to see them break this downtrend line, get confirmation of that, and then we could be looking at a fairly good setup. Word of warning on this one, I'm going to put, I'm going to add a parameter, capital appreciation. We're going to add, whoops, lost it. Actually, not there. Not there, or I'm not seeing it.
What are you looking for, Rick?
Looking for value. Where am I going to find that?
Capital appreciation, or it's down below. It's just.
Do I have? Oh, I probably have it already. Oh, there we go.
Yeah.
All right. Thanks for that, Steve. Yeah. So a bit of a word of warning. You will see very overvalued. However, on this stock, that never seems to matter too much. All right. So keep an eye on that and see how that one plays out. But we have seen it start to break out over the last 5 days. A higher valued stock here as well. You see sitting at about 1873 right now. All right, so that's the US side. Let's go next to, who do I have up next? Europe. Right, so we'll go into Europe. Let's graph all these. All right, I have this one in here because this was a previous one that I covered under trade ideas out of the European Union. So Ryan Metal, you can see it's been a good play. Let me take stochastics off on this one. You can see earnings moving up nicely here. So because it has been moving from an NPI perspective, we have trigger, we have trend. If the market keeps moving to the upside, you could see continued move in Ryan Metal. All right, but it was a previous trade idea, so I thought I'd show it for that reason. Here you can see Titan Cement, so ticker TITCR.AT, earnings moving up nicely. So this is a bit of a pullback here. Let me get earnings on here. All right, so looks like they'll have earnings coming up in March. So this one here, we haven't lost trigger yet. We've got trend intact. It pulled back, and you can see a big day on Friday, bringing us right back into resistance from the old swing high. So this is one you're going to want to see whether it can break through this level of resistance, get confirmation, and if it can continue moving to the upside, could be a good play there. And then this one here, Synergy Holdings SA, financial management. Earnings moving up nicely here. You can see another pullback story. All right. We've got trend intact. We just lost trigger. You can see it pulled back to a half decent level here as well. Right. We've got some touches in here and here. So it's trying to bounce off of that level, 950 for the stock. So you can see whether this can bounce and get through overhead resistance here. We do have a bit of distance there, not much. All right, so, and I believe that one was also, no divergence there. All right, so that's the European trade ideas. Let me jump next to Australia. And let's go to viewers here and graph all of these. All right, so this one too was a previous trade ideas block. It's actually the top VST stock in the land down under right now. Let me get stochastics off here, and I'll get that drawing. But you can see quite a bit of volatility with this, and even though it is a top VST stock, it does look like volume can be an issue at times. But it has worked out nicely. And you can see with this one here, it is taking another run. A lot of gapping in this one, is taking another run at the previous swing high. Earnings really looking nice on that. And here we've got earnings moving up the page nicely here. Not model by any stretch of the imagination, but definitely moving higher with this one. We still have trigger and we still have trend intact, but you can see with this pullback to these previous tops here that trigger has pulled back here and is kind of flattening out as it tries to find support at this level and bounce from there. All right, very close to its previous swing high. So see if this can bounce, get confirmation, and if the overall market moves, this one might be able to as well. It's industrial capital goods. And because we are in Australia, I showed a Nico Eagle on the Canadian side. So let's make sure we touch on a materials or gold play in Australia. So you can see earnings moving up nicely overall. We've got trigger, we've got trend. So this is kind of like a Nico Eagle where it's continued to move up higher, even though we know gold has been fairly volatile over the last while, moving up, but it's been doing so in a volatile manner. And most of our gold tracking ETFs are, sitting at this level here, looking to try to break through previous resistance. All right, so this one has already been able to do it, continues to run. If the underlying continues to run and the overall market does, see if this one will keep going. All right, so I believe that takes us, let me just jump back to the slides here. All right, so Steve, are you ready?
Always.
Always ready. All right, well, I'm going to hand everything over to Steve and let him run with the keynote presentation.
All right. Thanks, Rick. Boy, that was a very thorough discussion of all the international markets. That was great. And what we're going to do today is take a journey into a very specific topic that's near and dear to my heart. It's called bottom fishing. And at VectorVest, we do it better than anybody else, quite simply. And it's an art. It's something that you've got to work at. It's something that you get more comfortable with as you do it. And it's something that, boy, we've been teaching now. I started teaching this with Dr. Bart DeLito. My goodness gracious. 2004, somewhere in that time frame. And he had already done a couple of these, of course, by then. But boy, I've learned a lot because you get about 3 or so bottom fishing opportunities in any given year, where stock market pricing comes down enough to where if anybody's ever heard old Warren Buffett say, the best time to buy stocks is when blood is in the streets, it's absolutely true. And what you got to learn how to do is buy the blood, buy the things that really got hit that have value. That's the trick, But you want to find the bloodiest assets out there that still have some value to them. And so that's what this whole thing is about. So it takes a little bit to get your head around. Do you want to start with what your objective is? And so what do we want? Well, we want, in simple terms, we want to buy stocks that produce double to triple digit gains in days to weeks, not years. So hopefully that already catches your right in the gut there a little bit, where you're so, boy, that sounds interesting. Okay, double to triple digit gains in days to weeks. Yeah, I might stick around and listen to what this guy has to say, right? All right, so it's going to require you to get away from the VectorVest norm and able to do this, and that's where it gets tricky for some folks. So If anybody's ever been through Stephen Covey training, you're familiar with what he, and of course, lots of other folks call a paradigm shift, right? But it's out with the old, in with the new. It's a new way of thinking. And so when we look at bottom fishing in VectorVest, there are bottom fishing outfits out there that try to bottom fish all the time. We're not interested in that. What we're interested in VectorVest predominantly, right, is go with the flow. So we're interested in, oops, let me move this here a little bit. We're interested in buying rising stocks in rising markets that have good rising earnings per share patterns, and stocks like Stride, which we've owned in the Jockey Club for a number of weeks. These are the bread and butter. These are the ones that you want to own when markets are healthy and markets are rising, and go with the flow, go with the trend, right? In terms of bottom fishing, what we're going to be doing is quite different than that. What we're going to be doing is we're going to be looking for opportunities where markets correct, right? And so a standard definition of a market correction is 10% or more. So if you're in a situation where you start hearing the discussions, or you're looking in VectorVest and you see, oh boy, the VVC was at $65 and now it's in the mid 50s. The markets have really come back, right? And that creates opportunity, and that creates a situation where you can go bargain hunting for some really good stocks that have been clobbered. Okay. And so what we're going to do is define a systematic approach on how to do that. And ultimately, your ability to stick to the system is going to determine your success, just like anything else in life. So it's as easy as 1, 2, 3. That's the good news. I find the more complicated things are, often that complication turns out to get into the way. So we try to keep things as simple as possible, as often as possible here at VectorVest. No different with bottom fishing. The first trick, which really isn't a trick, but the first thing to know is precisely when to buy, because if you get this part wrong, things can escalate very quickly against you. So we're going to cover that at some detail here, okay? And so this is my opportunity to get into the software out of the slides. I love doing that. So hopefully you're seeing the program now. I'm sure you are. So the first things first, your best bottom fishing opportunities, you can start to get some knowledge just from the homepage, actually. When we're looking in the center box here and you see the color guard, what do you see? You see a preponderance of, well, really a preponderance of yellow still, but red is starting to come into the spectrum, right? I want you to think of this a lot like a mood ring. Although mood rings were kind of hokey, those things you used to put on your finger and it would tell you if you were mad or if you were happy. And I don't know, Rick was always angry for some reason when he put those things on, I think. But anyways, but you get the point, right? Even those things were a little hokey. When you look at the color guard here, and you see all red, then you know that you're really in the thick of some substantial downturn, right? And so what we like to look for next is we like to look for this indicator right here called the BSR, or buy to sell ratio. We like to see that indicator go below 0.2. When that goes below 0.2, we are searching for a bottom. Now the key word there is searching. And the other thing that I want you to understand, so the level is 0.2, right? But it's like stretching a rubber band. The more you stretch it, what happens when you let go? The further and further you stretch it, the faster and sharper and stronger and everything else that it's going to rebound and come back and snap your finger, right? So there's no such thing as too low. In other words, I would prefer, this is where it takes some time to get your head around. Yes, this guy's pulling for a bear market scenario that pulls the market all the way down to a BSR level of 0.02. That's as low as it can possibly go, okay? Because I know that when it gets there, the returns on the other side, when we do this bottom fishing part right, are enormous. They're magnitudes better than a 0.2. And oh, by the way, 0.18 is often magnitudes better than 0.2. It seems like it's just a couple of digits on a scale, but you don't realize that we're tracking 9,000 stocks, and it actually means a lot more than you might think. So a 0.15, better yet. 0.10, Better yet, 0.05, man, you need to start licking your chops because the rally that's going to ensue is going to be much, much stronger than just a 0.20. Okay. So 0.20 is where you start looking. The lower it goes from there, the better. We also have another indicator that can be helpful in this, although it's not a requirement. It's just another measure of how bloody the market has gotten, would be the MTI score. So when the MTI falls below 0.6, what we say is we're starting then to search for a major bottom, okay? An even stronger bottom, if you will. Now, having said that, 0.6 level, on some of the strongest bottoms that I've ever seen, if we think back to March of 2020, or if we think back to March of 2009, we start thinking about bottoms of that magnitude, the MTI can get all the way down into the 0.3s in those situations, which is well below 0.6. If I said magnitudes difference on just a second digit number, right? Then you might imagine a 0.3 is way, way, way below 0.6 on a 0 to 2 scaling, right? So my friends, what I'm saying here at the end is, if you're ever lucky enough at some point in the future to see a buy sell ratio below 0.1, and an MTI down in the 0.3s, boy, oh boy, get ready, because when the markets lift off, they are going to do a moonshot. That's what the kids call it today, right? So, where do we stand right now? Right now, we stand with the buy-sell ratio of 0.56 and an MTI of 0.99. A point of interest as we get into the market timing graph. So we came down here a little bit on this past downturn from late November all the way into middle of January, right? And that was enough to get us close. In fact, in the middle of the day, the indicator did hit 0.2. And so I was starting to, in my coaching group, we were starting to get excited about the proposition of bottom fishing, which we did go ahead and do, by the way. But I threw that out there with the caveat that we just can't expect the kinds of returns. In other words, we're going to take a spin at this thing, but the odds of having some kind of tremendous campaign are very small. And that's what we found out. We had one stock that went up like 60%. We had a bunch of stocks that didn't do very much at all, and we had some that went against us pretty good, but we ended up making a few percent, on this one. So there wasn't enough blood. There wasn't enough good stocks down there to where you get multiple 60% returns on some of the stocks that you're picking, right? So long story short, I was hoping it was going to come down a lot more, than it did. Now, if we go back here a bit and we start looking at, you look at how much the market came back here more recently, right? And then you go back here and you look about how much the market came back through this period of time, and then you start licking your chops a whole lot more, okay? So hopefully, again, that's the rubber band analogy, right? So if we come down here to the bottom, at this point in time, the buy-sell ratio is running not just below 0.2, it's running 0.09. And so there's a number of triggers in terms of when you want to take a stab at this thing, okay? And I would say it like this. I mean, the main thing is, let me try to zoom in to give you the best look possible here. We look for what's called a blast off day. Now, you tend to only get those when you're at these major bottoms, when markets have been actually in like a bear market correction and things like that. And then, Citigroup will come out and say they turned a profit in the first quarter of 2009, and the market can't even believe it, and they can't help themselves but buy a bunch of stocks, and the futures are up 3 and 4 and 5%, and it's evident that that's a market blast off day. The way I described market blast off, if that doesn't mean anything to you yet, is, well, we want to see the markets up more than a few percentage points when possible, right? Or think of it this way. if you're saying, boy, this guy Steve was talking about this bottom fishing thing on this international forum that I watched, and I'm wondering if I should send him an email because this might be a blast off day. If you're going to take the time to write me that email, you're going to feel like you're making a big mistake because, in other words, stocks should be up 10, 20, 30%, some of them on a market blast off day. So there should be no doubt, okay, is what I'm saying. Now, the odds are that that's not going to happen the first time that you're going to look at doing this bottom fishing thing. And so what you want to do is you want to put on the primary wave, okay? And you want to look at your window of opportunity is from the market low, okay, to the primary wave up. And when you get the primary wave up, what you want to do is then at the very latest, you're looking for an explosive day the next, just like we had here. And so this is 11/1/2023, okay? So this is a situation where markets have come down for a very, very good distance. So much so that the buy-sell ratio got below 0.10, not just below 0.2, but below 0.10 in this case. On this date, it's risen enough to get back up above 0.1. That's good. Now we've got a primary wave up. So now if I wasn't convinced that we've had a market turnaround yet, now I'm getting a mechanical signal from VectorVest indicating that it is in fact happening. This is a primary wave up, and there's nothing wrong with, on an aggressive standpoint, buying stocks the following day on market follow through when it continues to rise after a primary wave up, okay? So what I would do here then is run searches as of 11/1/2023, okay? So if I come over into Unisearch, that would take us then to the stock level. So the first thing is get the market right. Second thing is get the stock selection right. And so when we come over into Unisearch, we'll go to the bottom fishing category, okay? And when we get there, there's a whole host of different searches. So people are going to say, my goodness, there's too many choices here. I don't know which one to pick. Well, there's a reason that there's so many of them in here. And so I'm going to try to be helpful on this front. You know, one thing that you can do if you're totally willing to throw absolute caution to the wind is you can just look at the Russell, for example. Those are the small caps right here in the States, or any small cap index in your specific international region. Although I would say this, I do kind of in some ways feel like the more liquid the market is, the better I like the bottom fishing concept to begin with. I know a lot of people in international markets that trade the US equity market as well. I would feel a lot more, I feel a lot better about this methodology in the US. It's not that it can't be done anywhere else, but market breadth is very helpful in this endeavor, okay? Now, Russell would be throwing caution to the wind. It's a small caps, right? So when I run this, like, let's just run it today, for example. Let me bring it all the way up to current, just so you get a feel for what I'm about to say next. You know, we come in here and we look at the prices and we say, all right, I'm getting ready to buy stocks that are $3, $1, you know, $1.50, $2.25. All right, we got one guy in there that's about 11 bucks. Because you want to buy a basket. You want to buy at least 10 stocks, because, you know, some of these are going to be home runs. You're going to be a little bit like Reggie Jackson. 3 or 4 of these guys are going to be bombs. I mean, they're going to go over the fence. 2 or 3 of these guys you're going to swing and miss. You're going to miss the fastball, okay? And a good number of them you're going to foul tip, you know, and a couple of them you're going to hit a single, okay? But it's the 2 or 3 monster Sammy Sosa, Mark McGwire home runs that really make this whole thing click, particularly when we're down in this level of like the Russell, okay? Now, if you don't want to get down into that arena where you're reliant on hitting a couple of the major home runs, more on that here in a second, I'm going to show you some returns. You can go to this level, okay? Now you're up on S&P 500 qualified stocks. So the one thing that you know for sure is these are America's, in this case, top 500 companies. So again, you know, if you're in Canada, you might prefer to stay away from the venture, right? If you didn't want the same kind of exposure as the Russell. If you're, you know, in Europe, you might want to prefer the DAX or whatever the case might be for you. I realize that some of you don't like to trade, you know, each other's economies and things like that. You know, whatever that case may be, you can go towards more of a what you feel is a stronger universe of stocks, right, in your market. And then the name of the game is looking at low RT, right? So let me avoid stop ascending and getting that into the discussion for now. If we go to S&P 500 low RT, here again, what we've got is now look at the stock prices. You know, they're a lot different, okay? But watch this. All of these searches are trying to find situations where relative timing is as close to 0 as possible. So we're looking at the S&P 500, and now of those 500 stocks, the stocks that are at the top of the list have the lowest RT score of any of the stocks on that index. So hopefully you're following with me here, okay? So this is how we measure blood. We don't measure it by percentage. You know, you're not going to be able to do this anywhere else. You're going to have to do it in VectorVest. This is a very sophisticated indicator. It's looking at trend, right? It's looking at magnitude of trend. It's looking at a lot of information around trend. And when we look at the stocks, for example, this is what some of them are going to look like today. Look at this. This thing's come down from 150 to 71, okay? Now, you're not going to bottom fish today. But when you do, this is the kind of thing you're going to be looking for. EIX. And why aren't you going to do it today? Because the buy-sell ratio isn't down to 0.2, and this stock that's 54 might be 34. It might be 24. It might be 14 by the time the buy-sell ratio gets below 0.2. You with me? Okay. But these are the kinds of things that we're looking for. We're looking for the blood. Enphase, a stock that I started buying that stock at 11 bucks. It's all the way back down to 64, Rick. 62. Oh, I might start looking at it again. Wow. But this is the kind of thing that I like to see, because I know that some of these are really Freeport-McMoRan. I mean, that's a great company. Okay. Some of these are Enphase. These are household names. Celanese. These, you know, so there's a lot more comfort in this, okay, for some folks. And if that's not comforting enough, you come up here to the top and go to blue chip bargains, and you're going up another magnitude of quality of stocks. So now you're looking at NVIDIA, Dell, EMCOR, Novo Nordisk. Watch out for Supermicro. Hopefully you guys know all the story there. I'm not sure that thing's fully cooked yet. General Motors, Comfort Systems, Adobe, Deckers, you know, Caterpillar. Anybody know those companies? Right? So if I go back, hopefully you remember why we were picking this date. It's because it's set up as the perfect opportunity where you had enough market pullback where the market actually hit sort of a new low by a pretty good magnitude. Then we can come over here into the date again, which I think was November 1st. Now notice this. November 1st is 1, 2, 3. 3 weeks prior to even the confirmed up call. Okay, so we have a primary wave up off the low, and we're going to get confirmation the following day. So we're going to run our list as of the pre-market, and these would be the kind of stocks that you were finding January 1st, 2023. So let's start on the fun side of the spectrum. Let's start with the Russell stocks. I like letting all the air out of the balloon with the first one. Okay, so now here you got FFIE. Look again. You got to be comfortable with this kind of. Some of you are going to see the returns and you'll say, "Oh my goodness, this is for me." All right. Well, some of these prices are pretty low. Okay, so just bear that in mind. But we'll quick test the top 10 here. And if somehow magically you held them all the way to today, you're up 84%. You're doing 2 times the S&P performance. But the name of the game here is not try to hang on to these for the rest of your life. The name of the game here is double to triple digit gains in days to weeks, not years, okay? So we're going to go back to 2023, just take it through the end of the year and see where we're at there, okay? And notice the performance difference down below. Do you have, first of all, do you have double to triple digit gains? Second of all, do you have some that you wish you didn't hold on to anymore? So, did we hit a couple of grand slams like Sammy Sosa? Sorry, I'm a Cubs fan. Okay. Yeah, we hit a triple even with AKR. We hit a couple of doubles and a single. Okay. But boy, oh boy, oh boy. They blew a couple fastballs by us here. Okay. That's how this works. So we're going to get to money management here in a second. Also notice this. I mean, the ones that went up triple digits, what were the pricing on those stocks? The ones that went up doubles and singles, the pricing is getting a little bit more elevated in general. It is very interesting that the highest price ones here are the ones that did the worst. That is super fascinating. That's not typically the case. So anyway, so that's how this works. And then, how you perform, like if I do S&P stocks, and my favorite one in the S&P folder is stop ascending. It's basically looking for the lowest stop, STOP price instead of RT. So I didn't want to take the time to have to try to bridge that earlier on in the discussion, but I do think this is a superior one to the RT in this case, just because it's always worked well. Since I've started doing this 20 years ago, it's just always worked well. All right, let's see here. Let me do quick test the top 10. Boom. So this one did about 30%, not a loser in the bunch, but now you're on S&P caliber stocks, right? It's not doing quite as well overall. And what you're going to find out is we had very little opportunity here to manage anything out. So like with the Russell one of the things that might slip through because you just don't know better yet, but luckily your coach does, is that when we sell a couple of these at like a 20% loss early on, that gives us a chance to get another one of these triple digit returners into the fold. And so the performance, while on a quick test basis might look like, well, given the performance returns and the 10 for 10 with the S&P, that just looks like a better idea altogether. Well, it is for some who want the safety of the better quality stock. But what you don't understand yet is you're going to have the ability to kick some of these guys out and get a couple more high double-digit, low triple-digit performers in, right? And so you end up more like 60% returns than 36. Let me show you. So if I go over here, and so let me get in my PowerPoint first. What I did there was showed you what to buy, the explosive stocks with upside potential, okay? So Russell, for the most aggressive of you, or Jailbreak, or Blyer's bottom feeders, those are great options. For those of you who are more moderate in temperament, S&P. And then for those of you who are most resistant to portfolio volatility, then you want the blue chips, okay? So that's the what to buy. You got to understand yourself. We hope that you do. We do a great job of trying to help you guys understand that. Let me say this one other way. For some of you, you might just want to take 5 or 10% of your capital and go all in on the Russell banana stuff because that's where the money is. You know what I mean? So risk can be a function of, a couple of different ways of thinking. I don't think anybody should go all in bottom fishing. That's all that you do. Generally speaking, what you want to do is you want to break, because, for example, Here I go. Man, I could do bottom fishing like all day because I've done this so much. But I just want you guys to understand it. So hopefully I'm not going to go too far into the weeds here. But what I want to show you this. We went bottom fishing in the Jockey Club in 2022 6 times. Okay. And the market never had a blast off. Okay. What it did was it ran for a week or two, 6 times. So the buy sell ratio came down here. Let's just start here. The buy sell ratio came down here. Okay. And so you can see right now, as of that bottom, it's at 0.17. We went long this day. And I think right over here, we sold, with about a 9% profit on that first campaign, thereabout, okay? Then the market came down because it just wasn't going anywhere anymore. We just exited the campaign. The market came down again. I can't remember exactly when this next one's going to be. Must have been right in here, okay? And we did another campaign. And we started off good, man. We were up already about high 20% on the year on bottom fishing campaigns. And then it came down again and we did it again and we were up even more, okay? And then it came down again. And this right here got us too nervous. The market just was too discombobulated. So even I, in my coaching, got us just kind of out of the way here because it just didn't seem right to me. And the market, you can see, was kind of in flux, right? So that's going to happen. We the next 2 times we didn't make any money at all, okay? But then we made money on the final one of that year over here, okay? And we made more than 30% on the year bottom fishing. Look at this. Bottom fishing in a year in which the market did nothing but go down. All the money that we made in the Jockey Club that year was bottom fishing and buying petroleum stocks. And the petroleum stocks were flying. You guys remember that? That was when they were thinking oil was going to 150. Rick was pretty sure of it too, I think. I'm just kidding, Rick. I'm not throwing you under the bus. I'm sorry. All right. I did too. I thought it might go to 150 myself. So, it's this is something that even the whole trick is just getting the timing right. And I say this with complete sincerity, based upon what I saw the market do over the last 2 days in VectorVest, we might get a bottom fishing opportunity here pretty quick. I wouldn't rule it out. I'm very interested to see how the markets behave and how all this stuff goes down over the next week. Next week, I think, is going to be very interesting. You have a couple more big tech stocks coming up too. So the whole thing is, these people on Wall Street, man, they'll drive you crazy. They don't understand earnings, trend, and all that stuff. At least they don't tell you they do, even if they do. So, the reality is we shouldn't have any kind of substantial downturn in the market right now. Earnings are still too good. And if you've been paying attention, by and large, they're still coming in really good so far this quarter, right? And I would expect that to continue. I would suspect that it's going to be a continued slight softening of earnings, but still quite strong. So Fed Chair Powell was right when he said economy is strong, okay? Most people don't understand that still. And what they're going to do when you're in a case for bull market scenario, what you're going to do is you included that are watching this right now, you're going to worry about everything. You're going to start becoming a conspiracy theorist. You're going to be worried about all the stuff that they're talking and trying to get you worried about on TV, because you know that the economy is, while it's strong, is not as strong as it's been, right? And so you're going to start worrying about everything too. But what this can do, ladies and gentlemen, is it can create opportunity. It can create a situation where markets come down here and maybe make a new short-term low. And you're looking at VectorVest and saying earnings trend is still rising. And if we're lucky enough, we'll find some awfully good stocks at some really cheap prices on the S&P, and we'll buy those and we'll make a whole pile of money. That's the name of the game, is buy low and sell high. Nothing in VectorVest does that better than bottom fishing. Nothing, nada, zippo, zero, zilch. There is not a process in VectorVest that is the essence of buy low and sell high more than bottom fishing is. So it is something that you should look at. It is an art form. It's not an exact science, you know, but the whole thing is as close as you can ever get. And I already told you, you know, in 2022, we had out of 6 campaigns, 4 were winners, right? But those 4 winners more than paid for the 2 losing campaigns that year, right? Sometimes you're going to get into a campaign and you're going to pick what you think was the wrong strategy because it didn't do all that well. So what? Keep doing it. Keep doing it, because the time that you get it right, you know, and I'm trying my best to help you get it right in the future. I'm giving you all the searches that I use myself when I do this. Okay. So, all right, let me just kind of round third base here, and then I'll try to reserve a couple of minutes here, at least 5 or 10 minutes for Rick to ask me some questions, which I'm sure we're getting, which will be fine. Okay. I can't look at those things while I'm presenting. It's like a rabbit and a squirrel. You know, I'll just be chasing questions the whole time. So what I'm going to do is come over here into Backtester now. Okay. And what I did was I ran some complete campaigns for you guys with also money management tactics involved. So this is a complete system now, right? So when are we gonna start a campaign? We're gonna start a campaign when the stock market comes down enough to where the buy to sell ratio goes below 0.2, period. And we have an explosive day, a day in which I don't even have to ask Steve if it's explosive, or no later than a primary wave up, with confirmation the following morning. Okay. So it's usually like a 2 or 3 day window from the very market bottom. Okay. That's when to do it. What to do? We talked about Russell being one of your most aggressive. Blyers and S&P are kind of middle of the road. Okay. And blue chip bargains is for the scaredy cats out there that want to see it a time or two and not really ever get into any serious trouble. Okay. So when we go from the same dates I showed you the quick test, which was just from the launch to the end of the year, we can see the Russell had 72.41% winners. Now that right there tells you that there were quite a few trades, okay? But it made 71%, not 36. Blyers made 53%. Looks like it had even more trades to get there. That's interesting. S&P had very few trades at all. In fact, I'm going to say zero trades. It was literally buy and hold for 30%. Blue chips, buy and hold for 25%, because there's no trades here. The only cost, I think these were $4.95 commissions. Maybe there was a couple of trades. I don't know. We're going to look. I'm going to show you how to find out. So here's what's in blue chip bargains at the culmination of this run. You got PWR, Caterpillar, Albemarle, First Solar, Tesla, NVIDIA, Celsius, AJG, Kinsale, Vive. Okay. Biggest winner was Quanta Services, 26%, at least on what's still in the portfolio right now. Caterpillar was number 2. Albemarle, look, all of those 3 did better than First Solar, Tesla, and NVIDIA. Isn't that interesting? You know why? These stocks weren't as bloody as those other ones. These stocks were bloodier. Okay, capiche? All right, now, what we could do is we could also look at something like a report, and you can see how many stocks were sold and for what. So, Rick, was this darn thing you were showing in, I was chuckling earlier. I'm wondering if that Australian XYZ isn't a kissing cousin of this block XYZ that was here in the States in this bottom fishing campaign. I'm going to have to say most likely yes. I don't know for sure, but I'm going to say most likely yes. Anyway, that was a 53% win. End phase. We're saying that one's kind of setting up again right now. This one went up 63%. Okay. So that's the, hopefully I've done enough to shed some good light on this thing. Now, when you go to Russell, let's look at that. Let's look at some of the results that would have been in here, and then I'm going to show you the stop losses, and then we'll have the questions. So we'll look at this one. Oops, wrong report. Come on, Chappell. Get your head together here, man. Oh my goodness gracious. Look at this. We took a 40% loss on Kutera, 26% on Faraday, that's a little meme stock thing if you guys have never heard of it. ARQT. So there's a bunch of nonsense down here, but you don't mind it because you just never know. And then, man, look at all these ones that were closed out at big wins. Look at that. We're trying to take profits at 50%, by the way. So this one kept gapping, and we closed it out at 62. 55, 50. That's 1, 2, 3, 4, 5, 6, 7, 8, 9 that got within earshot of where we're just going to take them off the table to begin with. So we're going to try to cut stocks round about 20% loss. Sometimes we're going to close them out the next day, and it's going to be less of a loss than we anticipated, right? Sometimes they're going to gap through our stop loss, and we're going to lose 40 or 50% sometimes, right? But look at how many winners and how, this isn't like, this is a methodology. It's, you're going to hit a lot of home runs. That's the bottom line. You're going to be better than Reggie Jackson. You're going to be the home run king. Okay. Now, some of you don't want to get into that, though. It might look easier than it really is, because when you're going through this kind of volatility, just imagine then the volatility in the portfolio. Like, look at this. This thing goes up. You're up about 12%. Then it goes underwater. Then it goes up to 75%. Okay. This first 2 or 3 weeks, this is what separates the men from the boys, as they say. The first 3 weeks is what separates the men from the boys. It's very challenging. It looks wonderful in hindsight. So I'm gonna before we get to the questions, I'm gonna leave you with this. It's an art form. You're gonna make mistakes. You're gonna close out winning campaigns. It's just like anything. You don't ever really learn much about the stock market till you take a couple of big losses. That's just the way it goes. We've all paid the price to play. All of us have. Fess up and don't lie to everybody. Okay. So, work at it. And if you're smart and you picked up on what I said, you probably ought to shy away from starting with the most aggressive, even though that's potentially the best idea. You might just start where the water is as easy as buying. Look at this trade history here. Oops. Come on, Chappell. There was a couple of trades, and a couple of them went up 50%, okay? But there was 12 trades here. You know what? There was 12 trades on the S&P. There was 12 trades on the blue chip. You get up here, there's 5, 6 times as many trades, okay? So bottom line, final thing, and then Rick, I promise I'm bringing you in here, buddy. I promise. I'm sorry, man. All I did was manage them with a 50 gain, 20 loss. And so your max risk per position, assuming that you do 10 stocks, even allocation of funds, your max risk is 2% per trade. Okay, now that's 2% on the capital you use for this campaign. So that 2% for some of you could be $20,000, and that 2% for others of you could be $2,000. Because it's relative to the capital that you deploy into this method, right? So that's why I say some of you can reduce risk even further, and that 2% risk per position could be even less than that if you're using less than your full amount of capital that you could, right? So if you have $1 million account and you use $100,000, you're substantially dropping that from 2% risk down to less than 1. Okay. And you cannot move that stop loss down there at 20 any lower. It needs to stay right where it is at 20. And I would suggest that you leave the gain at 50. And then when we get to a bear market, off an earnings recession, when we get the bottom fishing signal, then you're going to change that 50 to a 99. Okay. But you cannot look, you don't want to move either one of these if you can help it. You want to leave them right where they are. That's gonna do you well no matter what happens. Okay. If you understood what I said, you can sometimes adjust the gain, but you better be sure you know what you're doing there. Make sure you understand what I meant when I said earnings recession. So when the earnings trend indicator actually goes below 1, and we actually have a bear market, not just a bunch of hoopla, right? But an actual earnings recession. Then when you get to a market bottom, then, I mean, you're going to have triple-digit potential returns across the board, okay? All right, Rick, fire away, sir.
Hold on, Steve. I was still,
No worries.
you got me there?
Yeah, I'm sure the chat is probably buzzing.
I'm still collecting some here, but
All right.
while I'm collecting, I do have a question for you.
Yeah, man.
What's a mood ring?
You never seen one?
I think I'm far too young to know what a mood ring is. Where's Carol? I'm going to look for Carol in the chat. Come on, Carol, back me up on this. I'm much younger than Steve. I have no idea what one of those mood ring things is that you were talking about.
They may not have them in Canada. Maybe they never had them. Well, you grew up in the States though, didn't you?
I think they didn't. I think they didn't happen in Canada because we were tariffing them or something like that.
That's probably true.
Yeah, actually, we did have them, Steve. But every time I put it on, it showed me as angry, even though I'm so happy-go-lucky all the time.
Yeah, see, that's why I said it earlier. I figured that would be the case. That's what made them so funny. Is yeah, they always said I was angry too.
Yeah. So I couldn't wear it. It was bringing me down.
Yeah.
You know that we made you say doo-doo in your presentation there. Did you know that?
No.
Now, I have a feeling Monday morning in the Jockey Club.
Yeah.
I have a funny feeling you might be saying doo-doo a few times this Monday.
Okay.
After the tariffs, if we get those tariffs applied. And what was the other one I had for you? Oh, what's a conspiracy theory? No, I'm not going to make you go there. We'll never get out of here. All right, so let's get to some of the questions now.
Those were not questions from the gang, I would suppose. Those were Rick questions.
Yeah, those were all mine.
Okay.
And so some of them I know you ended up covering. One question, I don't know if you have any intel into this. Came from David. Have you noticed any change in BSR severity since onset / number of stocks being ETFs? I don't know if you have any intel on that one.
I don't, other than maybe the absolute low end of the spectrum has elevated a touch, like the ultimate low. We know what it is now, at least as of 2020, it's 0.02. So maybe there could be some slight movement there, but I don't think it's going to be enough to worry about.
Okay. Oh, I see Carol. Carol did come in and back me up there. So that's good. And Marguerite, of course, she knows what a mood ring is. So she knew they came to Canada.
Yeah, good.
All right. So some of these are comments. So Spencer had mentioned that he's worked this strategy from your education videos with great success.
Awesome.
So
who was that? Spencer, you said?
Yeah, Spencer.
Awesome, Spencer.
And Spencer also mentioned being worried about February and everything going on here with tariffs and everything else. So definitely we'll have to be on high alert, won't we?
I'm a little worried myself. Now, here's the trick. So it's okay for us to worry about them. What we got to do is just follow the signals. So the one thing that I don't know if Joey can port me back over into my program here really quick or not, but attaboy. I love you, Joe. All right, so market timing graph, okay? So here's where I'm at right now. I alluded to, well, if things get real nasty next week, markets might, sink down here and at least test the recent lows, if not maybe go a little bit lower. I think that's certainly a possibility. The other thing I would say is these gaps like to fill. So I really wouldn't be surprised to see prices maybe at least if we dip more come down into this area here, okay? But that might not happen, right? And so I would get serious about buying stocks again. Quite simply this, if the market can somehow make it back above 73 without coming down below, into these areas first, right? So we want to continue to go with the flow for now, on a go forward basis here, guys, until we come down enough, buy sell ratio goes below 0.2 and so forth. But I would also say this, I mean, the lower it goes, the more you should actually look to take advantage of this thing. So like if we're somehow, some of you are going to hate me for saying this, and that's okay. I'm cool with that because eventually you'll be with me in doing this. If we can somehow come down here, you're going to get much better returns. And I don't want to go any lower than that for now. But like this is probably, knowing what we know, I would say that this is probably, sort of max pain somewhere in this area right here, okay, of what's possible. But we'll see. I mean, forecasting is like, it's a fool's errand, right? I mean, that's why I try not to do it. It's an impossible task. So my final thing would be to go back up here and let's stick to the facts, ma'am. Just give me the facts, Steve. Don't give me all the intuition and the fluff. I'm doing one of two things here. I'm kind of just biding my time and seeing, do we break the recent lows or do we break the recent highs? If we break the recent highs, we're back at buying stocks again. If we break the recent lows, we start putting more and more defensive actions in to make sure we don't lose any money. And as we start waiting for buy sell ratio to go below 0.2. All right, back to you, Rick.
All right. Well, since we touched on this, and I know you have some insight into this, Carol was asking, so why are tariffs on our allies, Mexico and Canada, set at 25%, while the tariffs on China are only 10%? And how will tariffs help solve the problem of illegal drug trafficking?
Okay, so it's not
we might not have to go in the drug trafficking one, but I know we talked about this before, so you do have some insight into.
Well, yeah, it's not my position to divulge what I think about this. But since you asked, I mean, okay, so I feel that this is honestly, at the end of the day, a complete attack against China. In other words, what he's trying to do, and I'm just using my best guess, okay, which is probably worth a penny for your thoughts. What I think he's trying to do is divert all the operations that China has been moving into Mexico and now might, more seriously begin to move into Canada if he doesn't put higher tariffs there. He wants to basically reroute all that back through China, okay, and then pay their fair share. So he's also obviously trying to get manufacturing going here in the United States. So I think it's a multi-prong answer. But I think the difference is, in large part, the administration does not like what they see happening in Mexico. They don't want to see that spread to Canada. They want it to go back to whence it came. That's my penny for your thoughts.
All right, and then I've got some comments. So John Boston was putting in some comments, based on his experience bottom fishing. So he said he's bottom fished many times using QQQ options, so triple Q options, and have gone out at least 1 year or so premium along the way to finance them. He also mentioned how the COVID low in 2020 was a ridiculous time to buy stocks and options. And
Ridiculously good, or
well, his triple Q options were up over 200%
okay,
in a
he
few
meant
months.
ridiculously good. Yeah,
Yeah,
good. I agree.
yeah.
Yeah, once we got that round of stimulus, I mean, it was off to the races. Yeah, 100%. I will admit I was a little slow to the pedal myself, just because it was such a horrific event. But yeah, I agree
Well,
with
it
you.
it comes back to the late great Dr. Paul, right? Who will always
Yep.
say your best trade will be your hardest trade. And I think
Yep.
because we don't, we haven't had a really good pullback in a long time. People don't understand how hard it can be to pull the trigger when they say blood in the streets. There's blood in the streets for a reason, and
Yeah, blood
you
in the
can.
streets is more akin to you actually believe what you should do is stuff money in your mattress because it looks like the financial world is going to collapse. That's what blood in the streets is. Yeah. Mm.
Yes. So John also gave one, by the way, when the market is trying to find a low and has been going down, you can sell puts and buy some cash on the way down.
Yeah,
Stock wise, I like mid cap sorted by RT ascending. So just wanted to share those.
that's a good idea.
Um, now this one, Steve, I know you try to reiterate this over and over again. So Gil was asking, but what if the bottom fishing is weaker? Higher than BSR of 0.2, nothing to do similarly. Um,
Yeah, it's I have tried to push the envelope several times, and even most recently, and we ended up making money, but it was a it was hard for me to get to the end of the profit there. Um,
yeah, and
so
and I've
let me
always
show
heard,
let me show you. I actually did do it. So I have documented proof just so people can actually see it. But
and I've
Joey,
always heard
Joey,
you
if you can,
say, Steve, that it's not true bottom fishing until the BSR does get below zero point 0.2.
I cannot speak to that enough. Yes. So I pushed the envelope here, but I told them I was pushing it when I did.
Yeah,
And so if anybody in here, like I know Carol's in there, if they're a part of that group, they would be happy to tell you guys that I said, hey, look, this is not traditional here, but I'm seeing some things I like. So bottom fishing and rising industries was like at the top of the derby um, that morning on would have been 115. So if I go back to the market timing graph, so this is a pretty big gap up. We thought, hey, we might have blast off here. Okay. And so I did it. But the problem was, we just didn't get the BSR level, right? I tried to speak to that early on. Like it seems like, well, 0.23 is close enough, right? No. I mean, 0.19, I tried to make this point clear, is magnitudes different than 0.23. It doesn't seem like it. It really and truly is. And so the lower this number goes, the BSR, the better. Okay. Um, but what we ended up with was there just wasn't enough great stocks down there. I mean, um, look at this. I mean, I'm just going to give you the facts. Okay. There's that 60% I was talking about. We nailed Lightbridge. Um, and I think we did pretty well with some Bitcoin stuff, but it was tough sledding. It was tough sledding. Okay.
yeah. So, Steve, you'll be glad to hear that. So, Carol came to my defense that I'm much younger than you and wouldn't know what a mood ring is. She came to your defense that, yes, you were very clear when you stated it wasn't a perfect bottom fishing opportunity.
Yeah.
So, we are running over. We're going to bring us into a close here. One of the things, so there was a question from, let me find it here. Oh, it was Spencer again. And I think you'll have insight into this, Steve. It's not on the bottom fishing.
Okay.
And I thought it was really funny how, your presentation, the art of bottom fishing, how many times you tried to bait me today. That was
I'm
it was
sorry.
all
I don't know
it was
why.
all fitting.
I don't know
Um,
why.
Yeah.
If it was Glenn, it would have been Glenn. It just was one of those days.
So, yeah, Spencer is asking, is there any news when beta testing will begin on the new system? Uh, I
Oh, it's
believe it.
you mean 2 subscribers?
Yeah.
I'm not fully in the loop on that.
Okay.
I kind of thought it was already underway, but I could be totally off base. So if you've signed up for it, for example, and you haven't heard anything, then they haven't gotten to it yet. Um, so it should be imminent, I would think, if that is the case. Should be imminent.
All right. Um, yeah, that's good, Marguerite. All right. So let's take us home here. I'm going to go back to my slides. And let's get to our final one. Well, Steve, once again, excellent presentation. I think everybody was got a lot out of that for sure. And we're going to see if February is going to bring us to another one of those opportunities.
Might get one. Yeah.
We'll wait and see. But folks, we'd like to thank everybody out there. I'm going to go to my final slide here. Thank you for sharing part of your weekend with us. It's always great to be able to do these. It's always good to see how international it is. If you need any help or support at all, don't hesitate to reach out to our product support and training folks at 1-888-658-7638. As mentioned, and I've seen some people ask the question, the replay will be available on the VectorVest YouTube channel immediately after the webinar. All right, and you've got an email address for support@vectorvest.com at the bottom. If you have any ideas for future international forums, you can email Ray at rayc@vectorvest.com or me, rick.franklin@vectorvest.com. All right, but that brings us into a close. Thank you, everybody, once again. I'd like to say you're welcome to those putting in thanks as well. As we said in the beginning, stay safe and healthy out there, folks. All kinds of challenges out there all the time, every day, not just in the markets. So stay safe and healthy, and we'll catch you all next week in a new trading week. Bye for now.